Good morning, traders from Chicago. Welcome to July 2021. Thanks for joining me here today on episode number 2026. A quick mic check would be appreciated, although not necessary. Let me know if I'm coming across too hot, distorted, perfect, whatever. Thank you for that. Uh, it is 8:01 a.m. Chicago time on July 1st, 2021. Again, this is episode number 2026. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a market that has a mild risk on tilt with the Russell 2000, the small caps index, pushing higher by a fair amount, half a percent compared to everything else. Most of the indices are higher except for the NASDAQ. The NASDAQ is down 18 points, which is about one rotation, as you see here in the gray area. 18 points is just one rotation's worth. So it's you could technically say that it's kind of flat. We see mild risk on crude really running off. Crude trading up $2.43, breaking the $75 barrier, up 3.28%, with silver and gold to follow. Of course, the US dollar slightly off, but not that far off, and the treasuries are off as well. Allocation slightly to risk this morning. That is the mood of the market as we come in. EU corporate earnings came in upbeat, pushing those markets a little bit higher. We're still looking for the jobs report, which is tomorrow. And then this is, again, a friendly reminder that on Monday we do have the Independence Day holiday in the U.S. It is Canada Day today, I believe. So as they say, as Jeff Wagner, head trader at CT, says, find a Canadian and give him a hug. You might get charged with assault, but do it anyway. So the U.S. jobs report tomorrow and tight crude inventories yesterday. That's what's on the market's major docket. As far as releases, 9:45 Eastern, we get the U.S. market manufacturing PMI final. Not expected to be a big mover. It's a two-star figure. At 10, we have construction spending and ISM manufacturing. These can, especially the ISM manufacturing, can move the markets. Crypto is down, still hovering back and forth between 30,000 in the Bitcoin, 30,000 and $38,000 or so, and in Ether between $1,900 and $2,400. Quite volatile. So that's where we stand in real time. Looking at what was expected yesterday, the primary idea behind yesterday's play is that the overnight session sold off and held the mid area, and the expectation with the overnight point of control near lows and having pushed beyond Tuesday's day session low. So the expectation yesterday was that we would likely push through to the downside. Completely wrong. Instead, it really maintained a bid. So both scenario 1 and 2 were mostly wrong. I mean, it didn't have any pullback at all, and it definitely pushed higher than what I had anticipated. Here's your review segment. We're going to make this very brief. Everyone has their charts. The overall play here is an open auction in range. We ended up holding the prior low. This is a key element. The fact that we held the prior low makes it so that it doesn't invite it. We don't see sellers coming in and pushing that low, breaking the one-time framing up on a daily. So we put in a higher low and we ended up putting a higher, an even higher low. So here's Tuesday's low. Here's the early low on Wednesday, higher low. This immediately puts us on our heels in terms of going short and executing on either scenario 1 or 2. And then when it pushes, remember I expected resistance yesterday at 80 and then at 85. When it turns and pushes a true higher low here, definitely get off the shorts. And then from there, it just squeezed higher into 89. Let me put these out of the way. They're wrong. They were not updated. And then we just held the middle of the range. We broke the IB high yesterday and just held, for the rest of the session, we held the VWAP and the mid for both the full session and RTH. Another session with a higher high, higher low, one-time framing up continues, and the market is grinding higher towards 4,300, which it actually achieved in the overnight session by pushing to 43.05 for the overnight high, the Globex high. I'm going to make some changes to the way things operate. Having closed the pit for floor trading in the futures, having moved the settlement price to the 30 seconds, to the last 30 seconds of cash trading, and having removed the break, the halt between 3:15 or 4:15 Eastern and 4:30, it has become more important to monitor the settlement price. The settlement price, you see it here, settle, versus the close. Essentially, the 3:15 close, the RTH close, is becoming more and more benign, less and less significant. And so going forward, there's going to have to be an adjustment towards using settlement as the official closing price, which is true. It is the official closing price. Of course, the session doesn't end until an hour later for the futures. But for our sake, for our studies and so on, all the sessions need to move back to cash, and we need to use the settlement, the official settlement, as the closing price going forward. So this is a transition that's going to take place, and it changes the calculations a little bit because the market tends to move after settlement. So you can see here, settlement was at 42.88 and a half, 42.88 and a half. It's this small dotted line. And then the close is right underneath it at 42.85 and a quarter. This was the prior session. Actually, I'm conflating things because this is an RTH chart. This is where it shows up better. So here's settlement. Here's settlement at 42.88 half, and here's the close, which is at 91.75. So you can see that there's quite a difference between those two, and we need to get in line with the fact that the exchange is going fully electronic, and that last 15 minutes does have some used to have some important impact on where the session closes when the futures were trading in the pit and things had to be reconciled. The last bracket had to be reconciled. The pit trades in 15-minute brackets, but that's kind of going away. So in order to move forward with the times and keep up with the exchange, we're going to start looking at settlement and close at 4 p.m. Eastern, and RTH is going to move back to 4 p.m. Eastern. I'm not going to make that change immediately, but eventually that's what's going to happen. That's just a change that's coming. So back to what we're looking at yesterday, as the market, yet again, as the market pushes up, the delta is pushing down. And we've seen this for quite some time, um, before, as the market pushed up. So here's where the market opened on Tuesday, and here's where it closed. It opened and closed there, yet the delta is negative. It should be pretty much flat. So to me, it seems like there's a supply or a hedge as we move higher. We saw this earlier in the year through February and March, I think, or maybe even later. It's kind of interesting. I'm not seeing price discovery failing at the highs. So the market is not finding those sellers. It's not finding an incentive to let go of these positions, to close these positions. So to me, it just seems like you carry on with the long side until it finally does, until we have like a 1.5–2% down day or something with a failure to return. Generally, we have a 1% down day, and then the next day puts in a V bottom and goes right back to where it failed from, like we saw last week. So to me, we're just not there yet in terms of the selling. So if you're still someone who's intent on selling, it's going to be expensive, or your trades have to be very, very short term. Currently, the market pushed up on the European Open. It pushed up to new all-time highs at 43.0575, and then from there it sold off. We have what is an impulse on this 30-minute chart. We have an impulse down with a pullback to mid and VWAP, and normally during RTH this would be considered a bearish setup, a breakout to the downside. This is a setup for me to go looking for this low with a scale out ahead in case we get a higher low. So this is how I have to read it. We're on top of the point of control. We have a multi-distribution profile right now. No, I'm not flipping you the finger with that profile. We have a multi-distribution profile, but the key thing is we're at new all-time highs. That's what the main participants, or most participants, are going to pay attention to, but we're kind of hanging in there between the overnight point of control and the full session mid and VWAP. So to me, this is a tricky area against the edge of yesterday's range. It creates an environment where the open is not as easy to read. The delta is slightly higher. Here's the composite chart. We are still one-time framing up. Here's that low, and then we are one-time framing up. We're putting in higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, although it seems to be slowing down. The movement of the point of control on these higher lows seems to be slowing down over time, but still quite bullish. We're in new territory, and there's not much to project out here, although the measured moves, which I don't put too much stock in, the measured moves like 42.82 was spot on the other day. The measured moves are still kind of projecting properly, and the measured moves that I do are based on daily bar charts, RTH only daily bar charts, projecting where energy is likely to slow down. And what I'm looking for in measured moves is one or more kind of being in the range of each other, and those have been holding up, at least on a Virgin test, pretty well. So you can see them, they're marked MM, and if they are multiple tied together, more than two, then it's called MM multiple, to let me know that there's some confluence there. So let's move on and look at what's expected for today and get you out of here in the next few minutes. Okay, so again, let's take a look at how this has been moving. Whiteboard, here we go. Okay, so here's your point of control. Here's your point of control moving higher with price, moving higher with price, moving higher with price. And then yesterday, what did we do? We had a point of control shifting down slightly in the overnight session. And we had an overnight session that all of a sudden is testing lower than the prior RTH. And what does it do? It turns around and it pushes higher, but the point of control didn't move higher with the higher low, higher high. And then that starts to lead me, the conclusion there is that the market is starting to see failure to continue in a strong way. And so that's why I had the expectation that we would start to explore to the downside, which would give us much more opportunity, in my opinion. But in any case, tonight we're pushing the point of control higher. We're holding up here. So we see migration of value with price. As soon as we see value not move up while price is moving up, that's going to capture my attention as the very first sign that the market is not accepting higher prices despite the price action. See, going price action alone can be futile in that the market can put in a higher high but on no volume. And so if you don't see the volume in there, you're likely not to recognize that actually it did not move prices higher in terms of what the market accepts. Just because we put in a higher high and a higher low doesn't mean the market's accepting these prices. It could be stalling while it's doing that. And those are the signs I'm looking for. So it's important today to watch for that as we push up against the century figure at 4,300. We're at 4,300 in the S&Ps. Quite amazing. And so what do we do with today's point of control versus yesterday? Do we pull it back down? Not likely. Do we stall out? And then what do we do with the non-farm payrolls tomorrow once we do stall out, if we do stall out? So today, very tough to project with any degree of edge. The main scenario is an open auction that tests down, comes down into deeper into yesterday's range. I'm expecting 42.90 to be tested. 42.90 to be tested. Remember, there was a lot of size there yesterday that ended up getting taken out on the close. Looking for 42.90 test, consolidate, and then start to squeeze into 4,300 to push into the next level up, which is 43.03, before we sit sideways, giving us about 13 points of range, which is right there where it's expected to be at current volatility. The secondary is an open auction that pushes up, squeezes this 4,300, and then we get an impulse down. We get failure to hold that back into the overnight point of control, consolidate sideways, and then make an attempt lower before finishing near highs. Remember, tomorrow, non-farm payrolls, so today they're likely to jockey and put collars on and put hedges on and so on into the number, into the close, so be careful. Also, July 1st being the beginning of the second half of the year, beginning of the third quarter, second half of year, all of that factors into money flows, and there may be money flows that come in and push us through that 4,300, hence scenario one. So I'm going to be looking to trade from the long side structurally, short side scalps, also long side scalps depending on what it does, but scalps are dominant these days versus structural trading. Good luck, and I'll catch you tomorrow morning. Take care. Don't forget, non-farm payrolls at 8:30 tomorrow. Cheers.